Hi everyone, welcome to the Real Estate Tax Tips channel. My name is Cherry Chen. I am a chartered professional accountant located in Oakville, Ontario, Canada. And I'm on a mission to help small business and real estate investors to seek financial freedom and pave the way to financial peace. Now today, it's a really timely topic. It's the CEBA loan, the Canada Emergency Business Loan that was offered by the government back in 2020 and 2021, intended to help small businesses, local businesses, qualifying one to pass through the uncertainty of pandemic. Now, the loan offer at the time was $40,000 and $60,000. There's a top up afterwards. And for people who borrow $40,000, if they were to repay before December 31st, 2022, which we already passed, we know, then they would be able to get the forgiveness of $10,000 of loan. If they borrow $60,000, the original deal was that if all these borrowers were able to repay before December 31st, 2022, then they would be able to get $20,000 forgiven. So they borrow 60 and they repay 40, which is a really good deal. And during this period of time, everything is interest-free. The government has extended the repayment deadline from December 31st, 2022 to December 31st, 2023. And as you all know, right now it's September 2023, so it's about that time of the year that we have to discuss if there is an extension or not. Now, before I dive deeper into the announcement earlier last week, make sure that you give us a thumbs up if you like our video. If you have any questions about CEBA loan, make sure you comment below. I can't guarantee that I would have all the answers because this is pretty much fresh off the press. And even on their website, the FAQ is still not updated as of yet. Now, if you like our channel, make sure that you click the subscribe button to stay on top of the latest tax tips. Now, with that, let's talk about the announcement that we all heard about related to the CEBA loan extension. So late last week, Canadian government came out and mentioned that, hey, we are going to extend this for one last time for everyone, but they extend it for a whopping 18 days. So instead of having the repayment deadline on December 31st, 2023, now they extend the repayment deadline to January 18, 2024. So I was reading the news, I was like, huh? Like, what's the point of extending for 18 days? Apparently, they don't want you to do the repayment during holiday season, so they're giving you the time to sort out your finances after December 31st to make the repayment. Well, the reality is that they're not quite extending. They're offering options this time. So you have three options. The first option is you repay before January 18, 2024. Now, with this option, what does that really mean? Well, you need to have the money readily available to repay, to take advantage of the loan forgiveness. Like I mentioned earlier, if you borrow 40, you can have a loan forgiveness amount of 10,000, so you really just need to pay 30,000. If you borrow 60, you have a loan forgiveness amount of 20,000, you just need to pay back 40,000. And just by the way, as a side note, if you are intending to, if you haven't already, that loan forgiveness amount, the $20,000 or $10,000, are supposed to be taxable, and you have to take it into income. That should have already been happened. Let's say you are intending to choose option one. All you need to do is to make the repayment by January 18, 2024. If you have an outstanding loan of $40,000, you need to repay $30,000, done and over with, nothing need to be done, and this is it. If you have a loan outstanding for $60,000 from the government, all you need to do is repay $40,000, the loan of $20,000 of which will be forgiven, as long as you make the repayment before January 18 of 2024. Now that's option one, so it's pretty status quo. All they extended is for 18 days. All the extension given was 18 days. Now here is option two. It's a little bit more complicated. Option two is essentially letting you to borrow money from your bank. Apply to borrow money from your bank and then use the bank loan to repay the government. So the government is still being repaid on January 18th or before, but you're now borrowing from the bank. Now you owe to the bank, not owing to the government. I know it isn't quite working that way, but this is how it's structured. So essentially, you're borrowing from your bank, which is your other pocket, and paying the government. So essentially, through this exercise, you would still be eligible to claim the loan forgiveness portion of it. Now, the downside of this arrangement is that, hey, like you don't know the bank processing time. You don't know when they're going to get back to you. And you're also going to subject to the regular credit check and all these credit application that the bank is going to impose on a regular business. They're going to look at everything. And you are also going to subject to market rate. So current prime rate is at 7.2%. My understanding is that it's going to also increase once more. So you may be subject to 7% or 8% or even 9% type of loan rate, interest rate environment. And depending on your relationship and your financial situation with your bank, you may have to, they may give you a term loan of 3 years. They may give you a term loan of 5 years. They may give you a line of credit of the entire amount. So it really goes back to your relationship and your financial situation with the bank. So there's no guarantee in terms of how much you're really likely going to incur in terms of interest costs. Now, of course, we're not going to stop there. We do some analysis for you. We have some analysis for you here. If you were to choose option 2, borrow money from your bank, as long as you submit application before January 18, 2024, you automatically have an extension to until March. You will automatically be entitled to this new extension that the government gives you until March 28, 2024. So what it means is that you will have until March 28, 2024 to repay the original loan and still take advantage of the debt forgiveness amount. So you would still be able to entitle to it as long as you have a bank application submitted before January 18, 2024. Now, so let's say you applied to the loan through your bank, and now you got the bank loan. And let's say you're lucky enough to get the interest rate at prime rate, which generally doesn't happen. It's usually slightly higher than the bank rate, depending on the type of business you are in. Let's say you're able to capture and get a loan for 7.2%. Now, and the repayment is over 3 years. Now, I'm using a really simple example, assuming that you're able to get a repayment term, 3 years, interest only, which usually doesn't happen. They would usually require you to pay it installment on a monthly basis. But let's just assume that you're able to do that. Now, every single year at 7.2%, if you borrow from them a $40,000 loan, to repay the government's $60,000 loan with debt forgiveness of about $20,000, that $40,000 loan with 7.2% interest would be equivalent to $2,880 of interest expense a year. Now, if your if the term of your loan is 3 years and is interest only for the 3-year period, so over the 3 years, you're going to incur about $8,640 of interest expense on the $40,000 loan. Now remember, you save on the $20,000 because the government is now able to forgive you. You're able to repay it before March 28th deadline. And now you would be able to, you have a saving of $20,000, but you now have an expense of about $8,640. So your net gain is about $11,360. You also gain the flexibility of using this outstanding $40,000 in other activities in your business. So it's not necessarily a bad deal. It's just that you do need to manage the expectation because these terms could change. You might have to make repayment earlier, you might have to make repayment later, the interest cost could be higher. So there's a lot of variable in this type of situation. Let's talk about option 3, because now you're also offered option 3. Here's the option 3. If you borrow $60,000, you don't have enough money to pay it down, and you may not also qualify for the loan. What's gonna happen is that the government, you do nothing, and if you don't do anything, and you know that you don't qualify for the loan, what's gonna happen is that the government is automatically going to grant you a loan, a term loan, interest-only loan. What is going to happen is that if you borrow $60,000, you still need to repay $60,000. Now there's no loan forgiveness amount. You borrow 60, you repay 60. So on a monthly basis, you will have to pay interest expense at 5%, which is probably substantially better than what the bank can offer. But the downside of it is that you would not be able to qualify for the loan forgiveness portion of it. So using a $60,000 loan as an example, for a $60,000 loan outstanding on a monthly basis or on an annual basis at 5% interest rate, you are going to pay $2,000 interest expense on an annual basis. Not bad. Over the next 3 years, 2024, 2025, and 2026, there's 3 years of interest payments that you have to pay. So that amounts up to about total $6,000 over 3 years, total interest cost of $6,000. Now, but then because you don't qualify for the loan forgiveness program under this calculation, you're out the door $6,000 versus under option 2, under a similar term, assuming you can get it and qualify for it, you are ahead by $11,000. You are actually getting a benefit because there is a loan forgiveness program available for you to take advantage of. So in my opinion, under this set of assumption, it would be much better to choose option 2, apply for the bank financing, repay the government using the bank loan and pay a little bit of a higher interest rate, but then gain advantage on the loan forgiveness portion. Now, unfortunately, those are the only examples that I would be able to give. As the government release more information, we are going to share more with you. So until next time, happy Canadian real estate investing.